Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com, and welcome to today's morning call. At this point, if you look at the futures, you'll see we're down probably 7 to 9 handles. They've been bouncing around a little bit. Everyone's trying to point the finger at what it could be. It could be a lot of things. You know, you're talking about still the devastation from Hurricane Sandy keeps piling up. The headlines about Petraeus and now even some other general doesn't help. Doesn't help that in Europe they're talking about delaying a crucial, Greece vote for their bailout. And then, people are still lingering on the fact that third quarter earnings weren't great and the guidance still wasn't looking so positive. And, you combine all of that with a corrective phase that has been getting long in the tooth, so to speak, or is it long in the tooth? And that you never know. No one truly knows how deep a correction can go, but all you need to know is when you're in the corrective process. This way you could be flexible, this way you could raise cash, this way you could sell using signals earlier, which we've seen a lot of them starting in early October. And the last thing I would hate is if you use this weakness to finally get scared out of some of the positions that you've been thinking about selling over the course of the past month. Unless you're really jumping out of your skin and it's controlling your life, then you have to do what's best for you, and I would say get yourself comfortable. As far as the chart of the S&P, lately we've been talking about the 200-day moving average. What does it mean? Can we go through it, become a seller's chop, reclaim it, and start a new trend to the upside like we saw in June? And as of this point, it hasn't shown that face. The composure's been different. If you look at the chart of the S&P, you will see last June, okay, I'll show you, I'll take a step back here for you, was right here. Remember this head and shoulders pattern, the left shoulder, the head, the right shoulder. We broke this neckline. We broke, this was like 1360, and we had a pretty sharp move to the downside. And in these few days is when we broke the 200-day. On this day, we broke it, stopped people out. You put a little outside day in. You saw a potent move. That means buyers came right in, potent move to the upside, went sideways, and then this has been the trend since June 4th. Okay, so now the question is, what this time? So what I wanted to do is figure out what are we doing around our 200-day at the present time? What does it mean? And if you look right here, here's your 200-day, and right around 1380-ish. And after breaking a few different trends, we talk about time frame analysis. Okay, this is the accelerated trend that ignited back, in the end of July that we followed, where we were following the 8 and 21-day moving average. It broke right here. This was also a time when the Qs and technology was getting weaker, and this was also a time when IBD went to market correction, right around 1440. Doesn't that feel like it was so long ago? Right there when they went to market correction, you could have saved yourself 70 handles or so as an investor, and also started to think a little bit more net short versus net long as a market participant trader. Especially if you look at this June 4th area, this trend that we were following the entire way, when it broke right around here, when it broke on October 19th. Okay, that could have been your sell signal. And then more recently, we talked about 1403 to 1406 as an area to trade against. There was a lot of activity, little tactical cash flow trades, both long and short. Then finally it broke. It broke the day after we elected a president, which is pretty ironic. But anyway, that's when all the physical cliff talk started to really get going. So here you are, down in this lower pivot. So hopefully you stopped yourself out if you were not committed and said, okay, I'm going to trade versus level. But when you trade versus level breaks, you get out of the way. And I'm sure it could have been a little painful. Maybe you bought around 1420 and said, oh, I got to take a little bit of a loss here at 1403. Okay, a little loss is better than a much bigger loss down another 30 handles. So with that said, here's the 200-day. Trying to hold it, no real commitment to it. So today we're down 7-8 handles. I would watch 1373. 1373 is the low from Friday, which I was pretty excited about coming in Friday flat to buy it, for a trade today. I'm not as excited, but I will try and test some longs versus level, and I will look to see if anything can go positive in order to help get us off the lows. And one clue that I always look at is the tech sector, right? Because the tech sector is what led us lower. Tech sector broke its 50-day moving average on October, I believe, 9th or 10th, 3 days before the S&P, and it's been below its 200-day, much well before, any of the other indices. So today you want to see, can tech help support the market? And here is the tech sector. Okay, here is that head and shoulders top, the left shoulder, your head, your right shoulder. A lot of little micro things in here that I talked about trading-wise. Here is when It broke the 50-day. Okay, this was what, October 9th, like I just said. This is when, I follow the 8 and 21 day, right? 8, 21 day. I was trying to be, pretty like a portfolio approach during that August, September, as it followed. Then this is when it first broke below. Here was that lower high versus that top there. And then this really was, as an intermediate trader, that's when it all changed for me. That's when it broke. You had your retest, and we've been just cascading lower with technical damage adding up the entire time. So here we are pretty comfortably below the 200-day. All right, we're probably opening near this pivot. So this is what I would do today. 63.16. Write that down. The low here, 63.16. 63.16. What is this low? 63.25. So what I want you to do right now is grab a pen. Write that down. That is your morning pivot. Two different things could happen. One, it breaks below, hangs out below, no interest, nothing goes green, and keeps going lower, and then we get to another lower pivot. Another situation happens is we break below it, and some people get stopped out. It comes back above it, creates an outside day, which would be a day one of something potentially more constructive to the upside, and you'll see some maybe high beta stocks lead the way, go green. You'll see some semis, who knows, and then that could be a swing type trade if it develops. Doesn't have to, and it might not. But that is the pivot to watch. You go back to the chart, look here at the tech sector right here. We've now in this like descending channel that can continue to keep descending until we get some type of reversal trade. It tried right here. Remember this one? Led to almost nothing. Tried right here, wasn't extreme, led to nothing. So here we are down here. Let's see if this low pivot can lead to something different. As far as the financials, we talk about high-level stops. That's a group to watch also. It's still showing relative strength versus everything else, which it's like just say the cleanest shirt in the dirty laundry closet, whatever. Like a lot of people have been saying that about countries, but that's what you could say about the financials for now. And here are the financials, okay? This was your last area if you wanted to get stopped out. If you were hanging tough as it was in this upper base, looking like it could have went higher, it did not, it went lower. This was your stop, and now you have a lower pivot here. So watch the XLF, watch 1539, that is your lower pivot. If it breaks that, here is the moving average. This right here is your 100-day. So just to, as far as relative strength, look where we are. We're above the 100, above the 200. Technology is below the 200. The S&P is below the 200. The Dow is below the 200. So this is considered a strong group. So the question is, does it play catch up real quick, or is it something that we go to if we get some footing? As far as the home builders, another group that wound up, it was strong for the past few months, even the whole entire year, and again, had a high-level stop, had a high-level trend that got breached. So hopefully you sold, and now you could figure it out if you're more of that intermediate type of guy. So if you go to the XHB, which I'll show you right here, this is the last particular trend that it just started to break below as it closed right on the 50-day. That was your sell signal. We all look for sell signals. Look how above it is, above the 100 and 200. So if you sold it and you're not stuck in it, when it does some type of reversal, you'll be there for it. If you're an investor or a macro investor, maybe you just went to tier one because you've been holding it, for the entire run this year, and you won't get back into it. So that's how you have to know your time frame. As far as the industrials and some other groups, showing relative weakness. Let's actually go to XLI real quick. XLI right here, here's your industrials. Actually, as I look at it, still hanging around, okay? It's still above the 200-day, so I guess you could say there is a small ounce of relative strength here, because it is above the 200-day where some other indices are below. So some stocks in this group might be worth a look. So this is somewhat in line. And then a lot of people want me to talk about the metals. I'll just go to gold real quick. Gold, remember on the macro basis, tried to break above $1,800 an ounce right here. Couldn't break above it. So what did it do? Wound up failing at this momentum level, came in, tested the 200-day above that August breakout, turned back up, and then just got a little pressure coming into this intermediate area. So the question is, this small ascending channel, does it get break to the downside, and does it go back down and retest, or does it hold higher and show some kind of commitment? So watch to see how gold handles this down open, see if it can go positive. So at this point, as far as the sectors are concerned, technology is still the weakest one below the 200-day. Let's see if that changes character. The S&P playing with that pivot. You have that line to know how to deal with it just in case something develops. Financials holding higher, but you got to watch them also. Home builders showing some signs of fatigue up there too, and the industrials are in line. So, there's nothing blaring at you right now. So the question is, let the market show us what could, show its face early, what could help lead us off the lows, and we'll see that as it develops. But more importantly, right after we come back from this commercial break, I'll go over 5, 6, 7 stocks that could provide us some clues and opportunity, and I'll start off with Apple, which everyone loves to hear about. Stay tuned.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. Let's go in the trenches with some key stocks that could provide some opportunity today. First thing we got to talk about is Apple. I know everyone's obsessed with it, and rightly so. A lot of people own it, a lot of institutions own it, and it's considered one of the best companies in the world, which I still think it is. A lot of people putting some very unrealistic expectations out on it. There's chatter that they can have an iPhone 5S. Putting expectations that I don't think Apple needs. Apple doesn't need another iPhone. All they need to do is meet the supply of iPhone 5, have those iPad minis ready, and I think that it's going to have a great Christmas, and hopefully some pressure will be relieved. At this point, technically, we've talked over the last month and a half how to use it as a trade, and I know people were mad at me saying, oh, we don't trade Apple, we invest in it or we hold it, but you know what? Sometimes you have to trade it or you have to protect yourself, and when Apple broke the 21-day moving average over a month ago and technology started to weaken, that was your sell signal at 681. Then since then, every time it tested a key moving average, it would give you a feeble bounce and fell, feeble bounce and fell, and then more recently, when it broke that 200-day, I said, okay, is it a seller's trap or is it going to lead to more weakness? And if you remember, that was like 587, 594. I think I even tweeted, I'm like, guys, take the name Apple away from the chart. If you take the name away and you look how relatively weak it is, you'll be less emotional and it's more of a short than a long. And anyway, it stayed below the 200-day and then it continued lower. You look at the chart here, here it is. This is that small head and shoulders pattern up here that wound up leading to distribution. Right around here was your 21-day that broke. Here's when the neckline broke. Here's when the 100-day broke. And then right here, you look closely. I'll give you a little bit more of a close-up. You will see this is when it went below the 200-day, which has moved lower. It was right around 589-ish here. Actually, it was right around here. Broke, hovered below it. Now here we are down at this lower pivot. If you go back and take a longer-term look, which I just had up, there's some really big support coming into 528.66. All right, here is your lower pivot. I come in flat today with Apple. I am going to see if there is opportunity in Apple right around this low. Does it hold the low? Does it break it? Come below it, hold below it, and then you might wind up seeing, your 528. Or does it hold higher and show some relative strength, go green, then maybe even at some particular point break above this 554 and retrace some of this downside move. For me, it's going to be on my radar. It could give us clues on whether or not we have a gap and go to the downside in the overall market, or maybe we see some relative strength in Apple and in tech. So yesterday's low is 538.65. That's a number to trade against. And then the recent low from Friday is 533.72. So this is your area. This is your support to trade against. Watch the action here. I think there will be opportunity in Apple, both long and short. For me, I'm probably not going to be looking to short it through here. I think it's too dangerous from the size of the move to the downside. For me, I'm trying to find a long, but that hasn't really worked so well. Every time I've made some money long, it's been surgical, and any time I've tried to add, I've gotten hurt. So with this stock, you have to be very careful. Again, don't think of it as Apple. Think of it as a stock that you want to watch the price action, and if you do that, you become a little less emotional and you're a little bit more objective. As far as other high beta names, maybe look at Google. It was a little stronger yesterday. Trying to hold this key support. I talked about this support area. Once you had that bad earnings when it was halted, then you had one key area where it was trying to hold above and it broke to the downside. It's trying to hold the 200-day, which is a little bit stronger than some of the other high beta names. It was green yesterday, so watch yesterday's low. It's opening down. See if it can go positive. See if it can continue. This overall chart still in high beta land looks a little bit better than other ones. It's still, this was actually this area that we wrote down right by the 200-day and it held. And now see if it could build over, no rush really, right here, but it's decent. As far as Amazon's concerned, it's probably dancing right around this 200-day also. No real interest right here. It could break below. Some guys might be looking to get shorted. If you are in that camp, okay, 224.60. If it breaks below 224.60 and holds below, then perhaps you get a precipitous move down to 215. So, this harsh downtrend is still intact until it breaks and closes above it. It's more on the defense and offense, and it does have a high PE. So, if the market continues weaker, this 200-day is vulnerable. I'm probably not going to short it. I'm going to stay away, but I'm going to see if it shows any kind of signs of relative strength. Then move over to some of the banks. All right, Goldman Sachs, JP Morgan. You don't need all the banks. You just need a few. Check out to see what Goldman does today. It tried to be stronger yesterday. Look how yesterday was pretty much a red day overall in the market, but it held higher. Here's a small pivot. It's also above the 100 and 200 day. It's above recent support. See if it goes negative to positive, and then if it starts to get above this 2-day pivot, it starts to get above 117.84, and goes to a bigger resistance, then you'll know that maybe the market won't have a sustained down move today because some banks are showing that it can make a little bit of a higher high on a micro basis right there. So Goldman Sachs should be on your radar as it's opening lower. If it starts taking out yesterday's low of 116.30, then it's just pretty much a no trade. JP Morgan also, as you can see, it's closer to that support that Goldman's still far away. Here you see JP Morgan had a red day versus Goldman a green day, so it didn't show much relative strength yesterday. You do have a lower pivot here. So, if things start to get strong and it breaks above, that would be a decent sign, but I wouldn't really count on that. If it starts breaking below 40-ish, 40, 30-ish, there's an air pocket here to this little pivot at 39, and then the 200-day down here. So look to see, some clues there. Bank of America, just a name is somewhat of a stronger stock. It's, guys are asking me if it's still a macro hold. I do think it's a macro hold for the long term. Just put it in the drawer. That stock's hard to trade. As far as stocks and other groups, a lot of people were talking home builders. Hey, look what Toll did yesterday. Toll is starting to roll over. Toll broke the 50-day. It's hard to short it now, but the 200 days down here, so watch that. I know that a few of them had earnings yesterday. Let me just see this chart real quickly here. Baker Hughes didn't have it. One of the other ones did. I'm sorry, I don't know it off the top of my head. It wasn't Lennar, but I would also be careful with Lennar. Lennar, you talk about trends, and there's been a nice trend intact, and it's kind of getting close here to breaking this accelerated trend. Not saying it's game over, but stocks that break these trends, could see lower prices, and here is a lower price right there around 33.40. So just be a bit careful. Have high-level stops. This is what I call a high-level stop. You could always come back to it at another point if it holds in there. But right now, high-level stops are key to protect some gains. As far as guys keep asking me about Caterpillar and some of the other big names, if you look at Caterpillar, it's holding this trend line by a thread. If it starts to break below this trend line, if it starts to get below, just say this 80, 290-ish, could be in some trouble. Okay, then you could see 80 and below. If you look here, the stock has been broken all year. We've talked about it. We talked about when it broke. Look at this, broke the 200-day, never came back to reclaim it, and pow. Here it is, went retested that 200-day and fell. So just be careful. If this starts to break this moving arrow or this line in the sand here, you're going to see a lot more weakness in the market, especially in this group. Guys want to look at Coca-Cola. Coca-Cola, it's not it, right? I hate to say it like that, but anyway, this stock has broken many trend lines. Okay, this was when it tried to break out and failed up here. Then it hovered below, had continued downside movement. You have a high, lower high, lower high. Stopped right there, broke to the downside, and still not showing much strength. I know people are probably in this long term. If you're not in it, you haven't seen a reversal pattern yet here to get it in as a trade. Some ags. Let's take a quick look at CF. Trying to hold the 200-day. I guess I haven't looked at this in a while. This was the last time I broke it. But see what happens when trend lines break. This is when it broke right here, and just choppy, sloppy move all the way to the downside. So, that always happens. So you have to know, like, if you're an intermediate guy and not a macro investor, breaks this area, you get out of Dodge or look to start shorting rallies. Or if you are an investor, sell some calls and definitely get the tier 1 of some sort. So CF doesn't look so great. Let's see what Monsanto looks like. Monsanto, that's not Monsanto. This is Monsanto. Still hanging around. This was, I guess, this little uptrend. I probably drew this the same time as I drew CF. Came below it, came back, never got above the highs here. Momentum leaving a little bit. Holding up better. This is holding up better than CF, but had a little bit of a reversal yesterday. If you look here, tried to be strong and then closed on the lows. 200 days right there. So this is also isn't showing me anything so great to start running into there. Let's see retail. Let's see Walmart. Walmart, unbelievable run. My retail stock of the year. When it broke up, I said, if it breaks above 62, we can get to 72 to 75. You know what? It wound up going as high as 77.60 before starting to show some weakness. We talk about breakout failures. This was a small one. Broke out, couldn't hold it, didn't show commitment to the upside, came back in, and then broke the 50-day right here. And it's trying to hang around. I still think this is relatively stronger than a lot of things out there. If you're an investor, stay the course, but just stay a little bit lighter. Not really showing you tremendous relative strength or any reason to run in there, but it's still above 72. It's off the highs. Still well above the 200 days, showing some relative strength. So it's okay. Let's see how Target's doing real quick. Also showing some relative strength, holding the 100-day versus a lot of things getting to the 200-day. So as an investment, still looks much better than some other things. So macro-wise, it's fine. As a trade, I'm not seeing anything so great. Only at certain times do you get like really nice wide range bars like here, or some other spots. Otherwise, it's it's pretty choppy. Let's see Boeing. Someone asked me to talk about Boeing. Let's see Boeing. What a sloppy stock. Look at this, just rangy crap. Sorry to say like that, but not much action. But recently, it had a pretty big move. Okay, pretty big move to the upside. And, it's hanging around. So maybe look to this for some kind of cash flow today. I know two stocks that just popped up into my head that I'm going to go over to finish up. Yahoo. We talked about after earnings how it was strong, and 1660 in my head was the breakout. And if you look at Yahoo, it's continuing. It looks strong. Remember, we talked about the channel here. Look how long it stayed in this channel. And finally, with some decent earnings and some decent metrics, it broke above. And now it seems like a lot of people want to stay with it. It was a green day yesterday in Yahoo, closed near the highs. So today was down open. Maybe there's opportunity. I would look to Yahoo today. Yahoo above, 1756, and it can continue. Qualcomm also reported decent earnings. It's flagging here. We talk about gap ups, and here is your gap up. It's still holding it. It's trying to wedge here a little bit. This stock is holding up better than others. Their earnings were good, and they're in the sweet spot. I would say above 62-ish, that could show some continuation in Qualcomm. So that's really about it. I'm going to wrap it up. The sectors, which ones are the strongest, which ones are the weakest. We're hovering near that lower pivot in the S&P. Remember, 1373, that's your pivot to trade against. Apple, see what goes on there, 533-ish. I think it's only, trading right around yesterday's low, see if there's some relative strength there. Banks, definitely something worth a look. And on days of, or these seas of red, you want to see if it's a gap and go to the downside, or if some things can go green and help lead us off the lows for a good cash flow trade. And then if there's any kind of potency or any kind of igniting bar or this and that, maybe we get some type of day one to grasp on and then we could build on, but we have not seen that yet. And until we see that, stay tactical, stay defensive, get ready to switch gears quick. And again, bad times lead to better times, and there will be better setups that are more clear cut. And you can't control the environment, you can't control the market, you can't control politics, you can't control the fiscal cliff, you can't control any of these things. All you can control is your approach. So keep working on it, and I'll see you at the recap. Have a great day trading.